PulseChain is at the forefront of a digital finance revolution. This revolution is characterized by the tokenization of real-world assets, RWAs. Tokenization involves converting the rights to an asset into a digital token. This process enhances liquidity, accessibility, and efficiency in financial markets. Real-world assets, RWAs, are tokenized on the PulseChain blockchain. Tokenization involves representing tangible assets digitally. Examples of RWAs include real estate and art. Commodities can also be represented as RWA tokens. These digital tokens exist and are traded on the PulseChain network. Tokenization reduces traditional barriers to entry in various markets. It facilitates fractional ownership of assets, making them more accessible. This fractionalization enables a broader range of investors to participate. Global investors can now access markets that were previously exclusive. Tokenization democratizes investment opportunities across different asset classes. This increased accessibility can lead to greater wealth creation and distribution. PulseChain introduces fractional ownership by dividing assets into smaller, manageable units. These units are represented as digital tokens on the PulseChain network. Tokenization enables users to own a fraction of a larger asset, increasing accessibility. These fractional tokens can be easily traded, providing liquidity and flexibility to owners. A multi-million-dollar commercial building is divided into thousands of tokens. Tokenization allows for fractional ownership of high-value assets. Each token represents a share of the building's value. Investors can purchase these tokens, gaining partial ownership. This makes investing in commercial real estate more accessible. Tokenization reduces the barrier to entry for real estate investment. Fractional ownership represents a new model for investment. It allows investors to own a portion of a high-value asset. This approach significantly lowers the barrier to entry for various investments. Investors can achieve diversification with a relatively small amount of capital. Fractional ownership democratizes investment opportunities, making them more accessible. PulseChain utilizes blockchain technology for securing digital assets. Blockchain provides a decentralized and transparent ledger system. This system ensures the integrity and traceability of tokenized assets. The technology facilitates secure and efficient management of digital tokens. Each transaction undergoes a verification process to ensure its validity. Upon verification, the transaction details are immutably recorded. This recording includes all aspects of the transaction, such as ownership transfer. The immutable record ensures that the transaction history cannot be altered. The recorded transaction is transparently auditable. This auditability allows for independent verification of the transaction's integrity. Auditable smart contracts are designed to automate processes in a transparent manner. These contracts operate without the need for intermediaries, enhancing efficiency. A key feature is their ability to protect investor rights through verifiable code. The auditable nature of these contracts ensures trust and accountability in transactions. Blockchain technology inherently reduces the risk of fraud. It establishes a trustless model for transactions and data management. In this model, the blockchain serves as the single definitive source of truth. Every transaction is recorded on a distributed, immutable ledger. This transparency makes fraudulent activities easily detectable. The need for intermediaries is minimized, further reducing potential points of failure or manipulation. PulseChain transforms traditional illiquid assets. This transformation increases accessibility. The assets become globally accessible. PulseChain converts them into liquid assets. Tokenized assets facilitate instant trading capabilities. This instant trading occurs without the need for traditional paperwork. Geographical restrictions are also eliminated in tokenized asset trading. Tokenization enhances the accessibility and speed of asset exchange. Digital assets can be used as collateral within decentralized finance, DeFi platforms. Collateralization in DeFi enhances the utility of these assets. Users can leverage their holdings to access loans or other financial services. This creates opportunities for increased capital efficiency and participation in DeFi ecosystems. Blockchain technology ensures markets operate with continuous uptime. This always-on functionality provides 24/7 market availability. Traditional financial markets typically have set opening and closing times. Blockchain markets offer constant access, unlike traditional systems. Users can engage in transactions at any time, day or night. This uninterrupted service enhances market accessibility and convenience. Wealth transfer can be significantly more cost-effective. This cost-effectiveness is achieved through reduced transaction costs. Administrative burdens are also significantly reduced. The overall result is a more efficient and economical transfer of wealth. PulseChain utilizes real-world asset, RWA, tokenization. RWA tokenization involves representing physical assets on a blockchain. This process can include assets like real estate, commodities, or art. Tokenization on PulseChain aims to increase accessibility to these assets. This increased accessibility promotes greater global financial inclusion. Blockchain technology enhances transparency through its distributed ledger system. Each transaction is recorded on multiple computers, making it publicly verifiable. This distributed nature makes it difficult for any single entity to manipulate the data. Enhanced security measures protect against unauthorized access and fraudulent activities. Fractionalization democratizes access to opportunities. It breaks down large assets into smaller, more affordable units. This allows a broader range of investors to participate. Opportunities are no longer limited to the wealthy elite. Fractional ownership opens doors for more people. PulseChain is designed to facilitate investment, trading, and wealth accumulation. The platform aims to provide a secure environment for financial activities. It seeks to empower users to invest and trade with confidence. PulseChain's core objective is to help individuals build wealth effectively. PulseChain aims to foster a more open financial system. It is designed to increase the fluidity of financial transactions. PulseChain seeks to promote fairness within the financial landscape. The system's architecture is intended to reduce barriers to entry. This facilitates broader participation in financial activities. Ultimately, PulseChain aims to democratize access to financial services. The blockchain is setting the stage for a new era of opportunity. This new era is characterized by decentralized systems. These systems offer increased transparency and security. Blockchain technology enables new forms of digital interaction. It also fosters innovation across various sectors. This leads to new opportunities for individuals and businesses. PulseChain is innovating in the digital finance sector. This innovation is driven by the tokenization of real-world assets, RWAs. RWA tokenization involves representing physical or traditional assets on a blockchain. This process enhances liquidity and accessibility for these assets. PulseChain's approach aims to bridge the gap between traditional finance and decentralized finance, DeFi. This integration could lead to more efficient and transparent financial systems. This innovation aims to empower everyday investors in the financial markets. It provides tools and resources designed to enhance investor capabilities. A key focus is to deliver increased efficiency in investment processes. This efficiency helps investors manage their portfolios more effectively. Transparency is another core benefit, ensuring clear and accessible information. Greater transparency enables investors to make more informed decisions. Tangible assets can be represented as digital tokens using blockchain technology. PulseChain's blockchain facilitates the division of tangible assets into these digital tokens. This process enhances liquidity and accessibility for asset ownership. Tokenization on PulseChain offers a transparent and secure method for managing tangible assets. New platforms are emerging to broaden investment accessibility. These platforms introduce novel methods for individuals to invest their capital. They also provide new avenues for owning assets and building wealth. Furthermore, these platforms offer innovative tools for managing investments more effectively. Historically, access to certain lucrative markets was restricted. Participation was limited to specific entities. These privileged participants primarily included institutions. High net worth individuals also enjoyed exclusive access. This created barriers for the average investor. Such exclusivity defined traditional market structures. PulseChain addresses barriers to entry through fractional ownership. Fractional ownership allows users to own a portion of an asset. This lowers the capital required to participate. More users can access and benefit from PulseChain's offerings. This promotes broader participation and democratization of access. Traditional investment models often require purchasing an entire asset. This includes assets like buildings, artwork, or commodities such as gold. However, new mechanisms allow for fractional ownership. Fractional ownership enables investors to buy a portion of an asset. This eliminates the need to purchase the entire asset outright. The core process involves dividing an asset into smaller, more manageable fractions. These fractions are then represented as digital tokens. These digital tokens can be traded on various platforms. This tokenization process enhances liquidity and accessibility for a wider range of investors. Global participation enables access for individuals regardless of location. It breaks down geographical barriers to involvement. This inclusivity extends to virtually anyone worldwide. It fosters a diverse and widespread network of participants. The impact is a more representative and comprehensive engagement. This broad participation enhances the overall value and reach. Building a financial portfolio is possible with limited funds. A modest budget should not deter someone from starting to invest. Small investments can be the foundation of a diversified portfolio. Starting early, even with small amounts, can yield long-term benefits. Consistent, small investments can grow over time through compounding. Diversification is a strategy to reduce risk by allocating investments among various financial instruments, industries, and other categories. It aims to maximize returns by investing in different areas that would each react differently to the same event. Diversification allows access to previously inaccessible markets or asset classes. This can include international markets, emerging industries, or alternative investments. By spreading investments, the impact of any single investment on overall portfolio performance is limited. This approach can lead to more stable and potentially higher long-term returns. Exposure refers to the degree to which an investment's value is directly tied to the performance of an underlying asset. This connection allows investors to participate in the potential gains or losses of that specific asset. Direct exposure means the investment's value closely mirrors the asset's fluctuations. This is in contrast to indirect exposure, where the link is less immediate or diluted. Investors seeking returns highly correlated with a particular asset often prefer direct exposure. This strategy allows for targeted investment and potentially higher returns, but also carries increased risk. PulseChain operates on a blockchain foundation. This foundation provides inherent security features. Blockchain technology ensures transparency in transactions. All transactions are recorded on a public ledger. This public ledger is accessible to everyone. The combination of security and transparency enhances trust in the system. Blockchain technology ensures immutable data storage. Every token's history is permanently recorded on the blockchain. Each transaction is immutably stored as a block in the chain. Changes of ownership are also permanently recorded. This creates a transparent and verifiable record. Immutability enhances trust and security in digital assets. Auditability refers to the ease with which a process can be examined. Easy audits imply a simplified process for compliance checks. Verification processes are also made easier. This ensures transparency. It also facilitates accountability. Overall, easy audits enhance trust in the system. Smart contracts are self-executing agreements written into code. They automatically enforce the terms agreed upon by the parties involved. This automation eliminates the need for intermediaries in executing the contract. Once deployed, the contract's code dictates the outcome based on predefined conditions. This ensures transparency and reduces the risk of manipulation or non-compliance. The primary benefit is the elimination of cumbersome paperwork. This streamlining reduces the complexity of administrative tasks. It also accelerates lengthy legal processes. The overall effect is increased efficiency and reduced processing time. Implementing robust security measures significantly reduces the potential for fraudulent activities. Effective fraud prevention strategies safeguard assets and maintain financial integrity. Reduced fraud likelihood translates to minimized financial losses and reputational damage. Proactive detection and response mechanisms are crucial in mitigating fraud risks. Continuous monitoring and evaluation enhance the effectiveness of fraud reduction efforts. Investor confidence is significantly influenced by the perceived security of their ownership rights. Strong ownership protection assures investors that their assets are safe from expropriation or unfair practices. This assurance encourages greater investment and participation in financial markets. Consequently, robust legal frameworks that safeguard ownership are crucial for fostering investor confidence. Traditional systems rely on centralized institutions to establish and maintain trust. Decentralized blockchains offer an alternative approach to trust. Blockchains operate on a distributed network, eliminating the need for a central authority. Trust is achieved through cryptographic verification and consensus mechanisms. This decentralized nature makes blockchains inherently trustless, reducing reliance on legacy institutions. PulseChain aims to foster a more liquid and flexible environment for digital assets. This environment is designed to enhance capital efficiency. Improved liquidity allows for easier and faster trading of assets. Increased flexibility provides users with more options for managing their investments. Tokenized assets enable instant trading capabilities. Trading occurs continuously without interruption. This contrasts with traditional asset trading, which often has delays. Tokenization enhances the speed and accessibility of asset exchange. Traditionally, illiquid assets like real estate or collectibles were difficult to convert into cash quickly. These assets were often locked away, implying limited accessibility and transactional challenges. Modern financial innovations are changing this paradigm. New platforms and technologies are emerging to enhance the liquidity of previously illiquid assets. This shift allows owners to access the value of their assets more readily. The concept of locked-away assets is becoming increasingly obsolete due to these advancements. Investors have the flexibility to trade their tokens at any time. This accessibility feature ensures continuous trading opportunities. Anytime trading enhances market liquidity, it allows investors to react promptly to market changes. This facilitates a more dynamic and responsive trading environment. Therefore, investors are not restricted by specific trading hours. DeFi protocols allow users to borrow assets by providing collateral. Collateral acts as a security deposit for the borrowed assets. Users can utilize various assets as collateral within these platforms. This enables participation in lending and borrowing activities. By using assets as collateral, users can access liquidity without selling their holdings. Next-generation financial products integrate both tangible and digital assets. These products aim to create a seamless blend between physical and virtual investments. This integration allows for more diverse and innovative financial strategies. Participants can engage with assets that have both real-world and digital representations. This approach can enhance liquidity and accessibility for various asset types. The blending of tangible and digital assets opens new possibilities in financial markets. Creation focuses on generating new avenues for improvement. These new pathways aim to enhance yield in various sectors. Diversification is a key goal, expanding into new areas and opportunities. Creation also facilitates new models for ownership and investment. The goal is to build a fairer and more open future. Tokenization plays a key role in achieving this vision. Robust tokenization is essential for creating a more equitable system. Tokenization can promote greater transparency and accessibility. This leads to a more inclusive and fair environment for all participants. Empowerment places control directly in the hands of individuals. It emphasizes trust as a foundational element. Transparency is a key component of empowerment. Empowerment aims to create equal opportunities for all.